2 p.m. Central African time. A very good afternoon to you. Thank you for choosing us here on Eswatini TV's Nedbank Business Watch. If you're asking yourself what is happening, what are the latest news happening in the business landscape of the Kingdom of Eswatini, well, we got you covered, don't we?
And this is the show for you, certainly. On the program today, as Black Friday draws near, consumers are preparing to take advantage of the best deals of the year. But so are cyber criminals. During this high-traffic shopping period, fraudsters work overtime to circulate fake online advertisements and manipulate digital payment systems in an attempt to steal personal information and your hard-earned money. It is for this reason that your friend in a bank, Nedbank, continues to educate you on how to shop smarter and safer. As we turn to online shopping platforms for convenience, it becomes even more important to understand the risks. This silly season, knowledge is your strongest defense against cybercrime.
And of course, Eswatini's borders are about to feel very, very different. As of November 28th, the Minister of Finance, Neil Reichenberg, has announced a tenfold jump in the customs declaration threshold for personal travelers from 1,000 emalangeni to 10,000 emalangeni. It's a significant shift with real implications for how people move, how they shop, and how business flows across our borders. This morning, or rather this afternoon, we'll be joined by Business Eswatini's Chief Executive, Inati Dlamini. He's going to help us break down what this means. Will travelers benefit? How does this change the business environment? And is this the kind of policy shift that boosts competitiveness or raises new questions? And of course, we are going to look at the numbers that tell the bigger story. Government expenditure for this financial year now stands at 32.61 billion emalangeni, and the latest midterm budget review signals a rising debt trajectory, a projected 41.75 billion emalangeni by the end of this year. Now, that's 43% of GDP, up from 40.3% the previous year. It is a balanced mix of external and domestic borrowing. Yes, but what does this actually say about the health of our public finance? Sandelas Bia is going to help us understand all these numbers, is going to explain what's behind these trends and what they mean for the country's economic direction. Good afternoon again. You're watching Nedbank Business Watch. It's 3 minutes after 2.
And it's promising to be quite the show. Stick around for some of the latest in business.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Nedbank Business Watch, we are just getting started, and we start with our business news.
We begin with this. Most businesses continue to struggle with record keeping, which often leads to challenges when it is time to pay taxes. The Business Federation of Eswatini, Buffet, has encouraged local businesses to get close to the Eswatini Revenue Service and the Federation to avoid penalties that can end up hindering the growth of their businesses. This was said during the Business Federation of Eswatini Tax Indaba held at the Theatre Club in Babani.
We always think a tax it's really an inhibitor for our growth, a hindrance for our growth, maybe because we don't understand the dimensions. So we took it upon ourselves as a federation that every year it will be an annual thing now. We started last year, and we want to encourage one another that if you have a problem, especially with tax issues, because we are a federation, let's gather, let's talk about the problems, let's assist one another. Because you might find that you have a problem, you think it's a problem that you cannot actually rectify. You would think the tax person is destroying your business whatsoever. But then in our organization, we do have even this tax specialist, people who can handhold you and educate you and mentor you to do the right thing.
The Eswatini Revenue Services Director of Audit, Vusi Mkhonda, has said record keeping is key to compliance. He says the Commissioner General is always willing to work on helping every business case as it is presented, but that is done through the presentation of records.
Our biggest problem is record keeping. If you can't keep records, I say very sugi, because njengalo sishilo ukuthi commissioner nakabuka ama cases that our audit usebenzisa risk engine. The risk engine inema data sources lamaneng lamanye la external. So le data ikhona vele siyabona letinto ukuthi okay, imali iyahamba yale nama assets ayangena. But nasekufika return submit enile. Yakuphika ke risk engine. So for you kwokuthi ukhone kwokuthi udispele le suspicion ya commission sekufuna ukuthi substantiate file sekude mana ema records.
Small and medium enterprise holders have requested that the Eswatini Revenue Service help in cutting the queues at the border. They have also shared that they struggle to pay taxes because of late payments from suppliers, including government.
Sima SMEs siyafuna kucomplya ku-ERS njengoba vele sesibonile lokuthi kuze usebende kahle nangisomabhizinisi kufuna lokuthi ucomplye la kufanele ucomplye khona including lo ERS. Sicela ukuthi ERS asiside ikakhulu emagedeni. Sibusomabhizinisi labancane sidibana nebulukhuni egedeni kukhanze ukuthi emalayini madze.
Lenye inkinga lenkulu lesinayo sini lesisebenza nahulumende ukhanya ukuthi naye uhulumende akasibhadali ngesikhathi ngilokunye lokusenda sithi khanze sisikula penalty ngoba lama invoice ngalo solo akangeni le ERS so wawende ma returns.
The team from the Eswatini Revenue Service highlighted that through programs that enhance voluntary compliance like Sonzela Sikhulume, every business is allowed to come and talk to the service for possible negotiations on the payment of tax. Reporting, Nelson Langamandla, Vuminkosi Nzinisa Mbabane.
And that is your business brief this afternoon.
We'll go for a net break. We speak to Chief Executive of Business Eswatini, Nathi Dlamini, after the break about this new threshold that was set by Minister for Finance, Neil Reichenberg, making a lot of people excited.
Stay tuned.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Right, welcome back. Thank you for staying with us. The Minister of Finance, Honorable Neil Reichenberg, has announced the revised threshold for personal travelers declaring goods at customs border posts. The allowance has been increased from 1,000 emalangeni to 10,000 emalangeni effective Friday this week. We are now joined by Business Eswatini's Chief Executive, Inathi Dlamini, who is going to help us unpack what it is that this announcement means for the country. We want to discuss how this will be, or how this revised threshold, rather, will affect travelers, how it's going to affect businesses, whether it will indeed ease the movement of goods, and how it may contribute to improving the business environment in Eswatini. Welcome to the program, Mr. Inathi Dlamini. Perhaps just give us your initial reaction to this latest announcement by Minister Neil Reichenberg.
I think it's good. Depending on the regulations, it could also be not too good, and I will explain why.
Again, the lift is a threshold from 1,000 emalangeni to 10,000 emalangeni, 10 times higher. I want to understand from a business perspective, right, what signal does this send about government's intentions around easing trade and improving traveler experience at border posts?
Okay, first of all, I think maybe the first explanation is that maybe government knows very well the effects of inflation, right? Because when 1,000 was affected some years ago, if I can say from a power purchasing the parity point of view, how much is 1,000 10 years ago? It probably end up with this 8,000 today. So effectively, find that by increasing 10,000, no, they haven't actually increased anything. That's one thing, which means they probably know economics. That's another thing. But then again, you coming to your question, what implications? What does it say about a business? And I will answer you, knowing very well that I'm also the chairman of the Eswatini campaign, right? And if you open up the border post for imports, what are you saying about the Eswatini campaign? And I will explain. First of all, some people say it's a 10,000 per day. No, it's the 10,000 per month. Please let's note that. So if as a person I go buy today 1,000, they will be tracking it. If I buy another 3,000, it's 10,000 a month, and they need the receipts. You have to wonder, why do they need my receipts? Because probably they will claim the VAT. Anyway, so government doesn't lose anything here. And it only applies to individuals, not businesses. And I think not vendors. So I think let's look at it from that point of view. And also know this, the minister has made an announcement. We are yet to receive all the regulations to it. And I don't think they will just launch it and effect it without the regulations. And I've made a few phone calls today, and they've assured me the regulations are coming. And what I'm telling you, I'm not totally out of line.
Thank you for making that proactive step, because it further informs our conversation this afternoon. But one wants to understand in practical terms, how does this shift change the experience for an ordinary traveler who crosses the border for groceries, who crosses the border for supplies, for fuel, or small-scale trading?
Look, to be honest with you, as much as we encourage everybody to shop locally, there are services that you may find that I cannot find here, which means I have to go to Nelspruit. And they're usually well above 1,000 rand. That's just the impact of inflation everywhere. And with a 1,000 limit, I mean, what are you trying to say? What is it that costs 1,000 rand now coming from South Africa? So I would say on one level, the minister was trying to be sensible. And also, maybe at another level, he was trying to be alive to the harsh and commercial realities of trade and the attendant fees involved in trading. I think he just was being practical. And the mere fact that this does not affect importing businesses, I love it, because this is just only for personal consumption. And we know that personal consumption coming from South Africa it's so minuscule compared to the businesses, what they buy in South Africa, bringing into the country. So I am not worried. I think it's something good. It won't be extremely harmful. But for now, I would urge that we wait for the regulations, and once they come, and I've been assured that it's going to be a matter of days, let's look at them and come back here and litigate this issue again together.
The conversation around a lot of border posts in the Kingdom of Eswatini, especially Ngwenya, Lavumisa, and Lomahasha, facing long queues. It's an everyday reality. There's understaffing at the same time, but there's also infrastructure constraints. Does raising the threshold meaningfully transform things if the environment itself remains slow and outdated?
No, to be honest with you, if you ask and say, what is it that's causing the jams there? It's the thing of I have to declare things for 800 rand. I have to declare things for 100. It just causes so much traffic and it's a lot of nothing that you are trying to declare anyway. But now with the increase in this, you'll see how seamless probably it will become. You'll see how seamless it will become. And by the way, there's also exciting news coming out of Lavumisa in terms of change of border hours. But let me not tell you now. I'll tell you when everything is okay. So there are very good things happening through the border system. I can tell you right now.
We appreciate you whispering other developments happening in the sidelines. Look, small informal traders often operate on razor-thin margins. Does this increase actually reduce friction for them, or do other barriers still overshadow the policy change?
And one of my questions was to the minister today was, how about hawkers, for instance? Is a hawker classified as a personal thing for imports? It wasn't quite clear. All they said is personal imports, not businesses. But hawkers don't have a license. So would they be classified as a personal import? It wasn't quite clear. But for now, let's assume it will cover them because they get stock. Some of the stock from South Africa come in here and do their hawking and as vendors here. So I'm hoping that they will be included. And indeed, you told me that they work on razor thin margins. They do. Most of them. It's what they sell. Profits are so small, and if they lose something, even I don't care, however small, they make a loss from those goods. So I'm praying and hoping that they are included as part of the personal importers of this country, even though they are hawkers or vendors.
Yeah, interesting indeed. And from the business community's vantage point, which sectors tend to gain immediately from the higher threshold? Is it retail? Is it logistics, cross-border SMEs? What would you assert there?
No. None of those should be gaining. You must remember the whole target here, the whole revision is targeted at families. It should only be families that are benefiting from this. And we are hoping that people will not be importing 10,000 because somehow they don't declare and they go and resell at some business. Now, that would be very wrong. And we know for sure that's not the spirit behind this revision, where people will say, 5 of us, let's go, we'll bring in 10,000 each, knowing that you are going to be putting in a retail shop. I hope the authorities will be vigilant against that. I think it's wrong. It will be totally antithetical to the good spirit of this revision by the Minister of Finance.
Thank you for speaking to that flip side, because there's a lot of worry around, this possibly opening room for abuse, for smuggling or under declaration, for lack of a better term. Do you see this as a real risk? I mean, you do see it as a real risk, but the question would be, what safeguards does Business Eswatini believe should accompany this new threshold to sort of, guard us, be guardrails for that possibly happening?
Look, I think, and certainly the viewers watching us everywhere, online everywhere, they know we live in an imperfect world. Not all of us are honest. And as such, there's always that possible room for people to abuse something. They will try to abuse it. And I'm hoping the people who are creating those regulations now, some of whom I told that I'm coming to your program, and I hope they're watching us. Please, they should draft them in a manner to ensure that it's not easy for people to cheat. How they can do that, it's up to their creativity, but certainly we cannot afford that people start abusing it, and probably the ministry start to say, hey, maybe let's revert to the 1,000. We don't want to go there. Just 1,000 is too cumbersome, and it's really a futile exercise. So I'm hoping the regulations will ensure that there are enough guardrails against possible abuse by operators, be it businesses or the people, the personal consumers who are feeding businesses one way or the other.
That's quite good. Government has spoken about creating a more business-enabling environment. That is what they call it. I believe in your assessment. Your assertion is that this policy is indeed a real step forward. It's not just a headline, and I want you to speak to that and further, substantiate that.
Look, we are always in constant communication with government, and I must say that they have been viable partners in the gospel of them creating an enabling environment. They also knowing that an enabling environment always creates room for businesses to succeed and to grow, and when they succeed and grow, they hire people. And there are more people, there's more taxation coming to government. So why in this together? And I just want to, as we close the year, to be honest with you, to appreciate that viable partnership which we have enjoyed with government, that they've tried as much as they can. But obviously we still fall short in terms of creating the most ideal and conducive environment for businesses. In various areas. I know in company registrations, I know IPA is creating a one-stop shop which will add value to the whole thing in terms of attracting special talent from overseas. For instance, if someone started AI business, it's kind of hard to even get a work permit on that. Factory shells are not available, ideal office space. There are lots of things that are missing, but at the same time, as a destination for investment, we're not that bad. Government has really tried their utmost best. It's just that sometimes your best is always not enough in the grand scheme of things, especially where there is ferocious competition on foreign direct investment in particular.
Absolutely. I love the glass half full perspective while also being awake to some of the problems that persist because that then informs how we continue to remedy those. Business Eswatini's Chief Executive, Inathi Dlamini, speaking on the economic impact of this new threshold announced by Minister of Finance, Neil Reichenbach. He asserts he is not changing this policy willy-nilly, no pun intended there. Regulations are still coming, which will further inform some of the other questions that we've heard for him. Otherwise, we will contact him again once the regulations come out and we continue to have this conversation. Let's go for a quick ad break. We'll be back shortly with more.
Welcome back. You are still watching Nedbank Business Watch right here on Eswatini TV. Now, Black Friday is upon us and it is time to shop. With the frenzy, there is of course the element of convenience through online shopping. But what is online shopping and how exactly can we be safe, especially during this period, which is why I am now joined by Swazi Mgomezulu, who is the Forensics and Operational Risk Manager at Nedbank. Good afternoon, Swazi. How are you?
I'm good, thank you. How are you?
I'm great.
Thank you very much for having us this afternoon.
We're really happy to have you. So what is online shopping and how is it structured?
Okay, thank you so much. So basically, online shopping is one of the more modern and convenient way in which us consumers can utilize the internet to get to our retailers, get to our service provider at a global landscape at the comfort of our homes using the internet. So basically, it's online, it's shopping using the internet.
You know, we're just a couple of hours away from Black Friday. Everybody's busy. People want to shop. People want to buy this and that. It's hectic and also, you know, deceptive deals. And in as much as we want to take advantage of online payment platforms, there's also the element of safety to it. So safety in terms of the websites that we use.
Yes.
So I understand there's a concept called spoofed websites. What is that exactly?
Okay, so basically a spoofed website, it's a non-existing website, or rather a fraudulent site or page, social media page, that are being created more especially in the season. We call the November and December season a silly season because a lot of things are hectic and happening on the internet. So basically, spoofed websites are non-existing sites where criminals will be creating using artificial intelligence. You know, we're in the AI era, so AI has brought opportunities for us, but at the same time, it is now a weapon that is used against us by fraudsters. So they use these artificial intelligence tools to create websites that will mimic banks, that will mimic retail stores. Then these websites are used to collect the banking credentials for our customers. So you will be thinking that you are shopping from a legitimate retail store, yet you are transacting into a fraudulent platform, and your credentials will be stolen, and then transactions will be stolen from your online banking platform.
Right. As we raise awareness on, you know, cyber activities during this silly season, as you call it, how simple is it for one to identify that this could actually be a spoofed website?
So basically, we always say that if it's too good to be true, then indeed it should click something to your mind. So basically, we are seeing a lot of deals, promotional items. We're seeing cars that are being sold at massive discounts, which is something that we rarely see throughout the year, throughout the course of the year. So we'll find a tractor, because we're in the farming season, being sold at a mere 20,000 emalangeni, which is something that is too good to be true. So basically, those are the types, one of the ways of identifying fraudulent sites. So basically, you will be seeing massive deals that are just too good to be true.
Hectic season, everybody wants the best deal.
Exactly.
So during this period, how do cyber criminals exploit online shoppers?
So they will be targeting us because we are all about shopping. We want to buy new plasma TV. We want the digital microwaves and fridge, you know, all those components that they know very well that people are rushing to get towards year end. So they are manipulating the course of the season to try and make as much as financial gain as they can from our vulnerable customers and the nation at large.
A common slogan is be cyber smart, be cyber safe.
Yes.
What are the measures that online consumers or clients or shoppers can take during this period to ensure safety and be cognizant, rather, of digital use?
Thank you very much. We are saying to our customers, fraud has no boundaries. They should got their digital wallet. You could be sitting here in Eswatini and be conversating or shopping from a retailer in Europe, you know. So we are saying to our customers, they should verify. They should, if you are using a site for the first time, verify. Try to make use of reviews that have been mentioned by other buyers, you know, prior buyers to you. So use as much as verification ways as possible. You could also call our help desk just to ask if we've seen any transactions going into that merchant, into that service provider. We at Nedbank, we are always there to help our customers. So the message is that we should always verify from the sites, from the retails that we are shopping from.
As you add emphasis on the message, verification, why is it so key? Why is it so important?
It is very important because it is the very thing that is used to deceive our customers. So fraudsters will try to bypass they will try to outsmart you by giving you pressure, for instance, to buy, you know, this deal is going for, it will lapse in the next hour or two. Just let it pass. If it's something legit, then it won't give you the pressure to shop, like give us the money now. So if there's pressure, you must always think twice before you click. You must think twice before you transact. So basically, we always say if there's pressure that is coming, that is accompanying that deal, think twice before you transact.
Swazi, thank you very much for your time. Keyword there, think twice before you transact. Before, you know, the mums and dads, you make any purchases, guard your digital wallets. That was Swazi Mgomezulu, Forensics and Operational Risk Manager at Nedbank. And we're discussing how you can shop smart this Black Friday. Actually, the show continues after this.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. This financial year's budget total expenditure is 32.61 billion emalangeni. The Minister for Finance recently presented the mid-term budget review report, stating that the total public debt stock is estimated to reach 41.75 billion emalangeni at the end of 2025-2026. And that is equivalent to 43% of GDP when it's compared to the 2024-2025 financial year. That year, it reached 36.03 billion emalangeni, which translated to 40.3% of GDP. The minister further stated that the debt structure remains relatively balanced, with external debt amounting to 21.54 billion emalangeni, that is 22% of GDP, and domestic debt totaling 20.21 billion emalangeni, that is 21% of GDP. What do these numbers mean about the government spending? To give us the numbers meaning, we're joined by our economist, Sadele Spear, who joins us virtually. Good afternoon, Sadele. Very good afternoon to you. Thank you for making time for us. The minister projects public debt rising to 41.75 billion emalangeni. That is 43% of GDP. In the broader economic context, is this level of borrowing sustainable, or are we drifting into a risk zone?
Thank you, Mr. Ngumalo, and a good afternoon to you and the viewers. So in terms of sustainability, Mr. Ngumalo, I've always said as a country we need to do our own analysis instead of relying on IMF and World Bank thresholds. But what I've always said is we are now at a danger zone, even when you look at those IMF thresholds, which say we should be at 40% debt to GDP ratio overall. But now we are tethering on that 43% region. So that now makes it a bit difficult for government to try and balance spending together with, paying those obligations that we owe to those external parties. And I've often, Mr. Ngumalo, I've often cautioned government, because from where I stand, there is a threshold. When you look at those IMF thresholds, it does say that for middle-income countries like Eswatini, even 60% debt to GDP ratio is efficient. But I've often cautioned around that even the 40% as a country, the cracks were already showing in terms of the debt servicing costs, which remained very high. So I would caution government to work towards, lowering the debt to GDP ratio back to below that 40%, Mr. Ngumalo, so that we are able to continue with the social provisioning, capitalizing businesses, paying areas to the paying suppliers on time, while at the same time we stay in good standing with our lenders and we're able to pay our obligations on time.
What do you submit the IMF is not doing correctly that we could do better ourselves?
So when you look at the way countries like the IMF, companies and entities like the IMF and all those other Bretton Woods institutions, when they calculate this, it doesn't look at the micro nitty-gritties of that country. It's more an umbrella type of analysis, a panel data type of analysis that says, ideally, countries with this much income should be getting that, should be okay at that certain level. But you're not looking at the structural configuration of our economy, the issues that are pertinent to our economy, and when will our debt be sustainable within our context. That is why I've often argued that we need to do our own analysis so that we know, and it's an analysis that is informed by our domestic situations and our own constraints domestically, so that we are able to live and be comfortable with the debt, so that it remains sustainable and truly sustainable within our eyes.
Makes sense. Government spending is at 32.61 billion emalangeni, while domestic arrears to suppliers and contractors remain a real issue on the ground. How do these numbers square with the delays and liquidity pressures businesses keep reporting?
So when we're looking at those numbers, Mr. Ngumalo, one of the things that we found a bit worrying at midterm is earlier on in the year, we went on to take out a loan as a country, 2 billion to pay off these areas. But it seems we still have those areas problems even at mid-year, when we were of the idea that the money ought to have come in by then and we ought to have settled those. So what this means, Mr. Ngumalo, is part of the story, it goes towards what we're talking about, the sustainability, in that are we really sustainable in terms of where we are with our fiscus? Because that means now if we are continuously and perpetually accumulating areas to our suppliers, that means our cash flow doesn't quite allow us to buy and pay on time, while at the same time we service the debts, and while at the same time we ensure this social provisioning. And sadly, in business, Mr. Ngumalo, usually it is the creditors that suffer a lot when we have those cash flow problems, because you start with what is your core business, and then you end up by paying those who can supply you things on credit a bit later. So we do need to really look into our cash flow situation vis-a-vis the way we spend. And we are hopeful that with IFMIS, once it gets implemented, we are going to have a better handle of our financial cash flow, the projections and the expenditure projections, so that we are able to implement those and make those payments in real time. And that in its sense will improve the impact of the budget in terms of the overall multiplier effect that we expect. Because once we have those delays, then that multiplier effect is not as we would have hoped when we saw the budget being tabled. So right now, the delays also delay that multiplier, and it chips away on that potential growth.
Yeah, the minister says the debt structure is, he calls it relatively balanced. But with households battling high living costs, SMEs under stress, and unemployment still stubborn, are we spending in the right places?
So for me, Ngumalo, when you look through the minister's mini budget, it seems that word relatively well balanced in itself is a paradox for me, because when you read the very earlier paragraphs of the mini budget, the minister does make caution of the fact that we are our debt servicing costs are too high. So now, when you then come and say it's a relatively balanced and we're on good footing, it's just paradoxical when you've already stated that you are that there is an issue of balancing and striking a balance that needs to be made there. But in terms of whether are we spending in the right areas or not, we are spending in the right areas, Mr. Ngumalo, but what I see for me when you look at the budget and its execution per se, when you look at the fact that in terms of our recurring expenditures, we're sitting around 48%, when you would expect that with recurring expenses, we should be at 50%. So that means we are not churning out the transfers as fast as we would have hoped. And as well with our capital projects, we're at 48% at mid-year, and you would have hoped that it would be at 50% because this is where our growth really hinges. But we do know that ideally we are going to see those numbers push up in Q3 and Q4 of this financial year, and eventually probably we are going to get to that 6% growth target. And then in terms of whether we are spending where we are, when it comes to the household, it's more an issue of the cost of living. And we do know that right now, and we hope that right now with this salary review, it's going to be a bit better. And another thing that we need to be cognizant of, Mr. Ngumalo, is the fact that, we run a labor market system that relies on permanent and pensionable type of proposition. So ideally, the people who are permanent and pensionable tend to borrow more because they don't need to save much, since they have their pensions to dig into in the future. So we may not necessarily have a clear congruence between the household indebtedness levels and whether government is spending where government ought to be spending. And unfortunately, when we look at the mini budget, the areas we expected the minister to touch on in terms of his expenses for the year, whether and how things are being pushed, it really didn't go down to those nitty-gritties. We're waiting to see that entire outlay where we are now given the actual versus the planned versus the actual performance to mid-year, which usually accompanies the mini budget, and then we would know whether the money is being expedited where it ought to be or not.
And what does this rising debt tell us about the efficiency of government spending? Are we borrowing to invest in growth or borrowing to plug holes?
Sadly, what we seem to be doing right now, for example, I'll go back to that 2 billion loan to clear areas. So when we are now borrowing the 2 billion to clear areas, so that money is not making any impact on the economy. So you're just plugging holes. So really the multiplier you're going to get from that money is very minimal, if not zero, because it's money that's already been spent been done, so there's nothing that we are getting. So, but we do have these new mega projects which we hope are going to be pumping in this new growth. So what we need to do as a country is to ensure that we can pay our suppliers within that budget tier, so that when we move on to the next budget period, it doesn't then affect the ability of government expenditures to impact the economy and improve on that multiplier effect.
Mr. Speaker, thank you for your time. Appreciate your insights. We have come to the end of our discussion with Sanela Sibiya. We still have the Treasury Department from Nedbank to help us unpack the numbers in terms of our market analysis today. They'll be in conversation with Notsilas Tole, my co-host, after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back. We've come now to the market analysis segment for the show, and Toba Kameta joins me in studio now. He's also the Treasury Sales Manager at Nedbank. How are you doing?
I'm good, Notsila. How are you?
Good, good. Glad to have you in studio. So we do see the dollar weakening of late with regards to, well, as a result of the US data coming out. What's going on there?
Correct. So we are seeing dollar weakness at the moment due to just market sentiments around the data that has been coming out, mostly coming out weaker than what market was expecting. We saw retail sales numbers yesterday, which increased by 0.2%, and market was anticipating a 0.4% increase. We also saw consumer confidence also falling as well. So all of that data is sort of then created an expectation in the market that rates are likely going to be cut in December when the Fed sits for their December meeting on December 10. So the prospects of a rate cut have now increased from about from 50% to 80% probability. So that has sort of weighed heavily on the dollar. As such, we see it weakening against the basket of currencies.
How are stocks reacting to the news of the U.S. expectation to cut interest rates in December?
So they've reacted well. In times of low interest rates, investors then look at putting their money into higher yielding assets or riskier assets. So with the prospects of rate cuts in December, stocks have responded quite well. We've seen almost all the indices showing an uptick as well.
With a weakening performance of late, the rate cuts, if the U.S. does cut rates anytime soon, what does that mean for the dollar?
So a rate cut will mean, a hit on the dollar. If the rates are higher than in the U.S., then the dollar performs well. But if we see a cut, then that will mean dollar weakness. But it's still trading at levels that are quite strong. And there's also other indicators that then come into play. But more than anything, I think the levels that we're seeing now have already been priced in by the market. So if we do see a rate cut in December, we're likely not going to see maybe a further dip, because that has sort of been priced in and factored into the current prices that we are seeing.
Right. Toba, this is a business show, so I'd let you expand on how the equity is actually looking. The numbers will tell the story better. All
right. Maybe we can start with the currencies. So the Rand is doing quite well against all major currencies, 17.15 to 5 against the dollar, up 0.42%, 22.57 against the pound, and 0.33% against the euro. As we've discussed, that is due to the weakening dollar. That is due to the price of gold increasing. We know that South Africa is an exporter of gold, so it's a commodity-backed economy. So with the increase in prices of commodities, then we tend to see the dollar performing quite well.
All right. Now, if the South African rand is getting stronger as the dollar weakens, is this short term, or this is actually a rally that could go on for longer than we anticipate?
So it's a trend that we've seen. I think you will recall for the past few months, we've sort of been seeing the rand, gaining a bit of strength up to the levels of 16.9495 that we saw when South Africa got its upgrade. So there's prospects of further strength. And ordinarily, when you look at past experiences, the rand would mostly consolidate and strengthen around December period. And then when the year then starts, we then start seeing a bit of weakening, if we can just use past data as an example. So in the short term, we are looking at a stronger rand, but that is, time will tell if that continues.
You touched earlier about the reports of the U.S. retail sector showing signs of weaknesses or pressures here and there. What does this really say about consumers and how maybe it could affect global retail companies, especially now that we're heading towards the festive season? People want to buy more.
So so it speaks to a consumer that is strained in terms of their spending. It speaks to job opportunities that are, shrinking. All those then mean that there's less disposable income for consumers to spend on luxuries, So, but of course, we are heading into a spending-heavy period where people are buying. But nonetheless, there is that strain on the consumer. So with the rate cuts that are being that are expected, then that will sort of give relief. It is to give relief to the consumer to sort of have a bit more in their pocket to spend.
Right. In terms of commodities, how are things looking today?
So gold is doing quite well, as I've said, as it does in times of low interest rates. So with the expectation of of interest rate cuts in December, we've seen gold, gaining a bit of the strength that it had lost in the past few days. But we are at $4,160.26 per $0.23 per ounce, up 0.72%. So we expect gold to continue, gaining a bit of strength in these times of low interest rates. And then oil, on the other hand, is steady, I would say, a bit up today. But we saw oil hitting lows of about a 5-week low yesterday. It's currently trading at 64.62. That is after Russia announced that they are considering advancing the US-backed peace deal between them and Russia. So that's Ukraine. So that would then mean that there is increased supply in the market. If Russia then is no longer sentient as they are in the West, then their oil produce or supply will then be in the market again. Right. So that is sort of weighed on the price of oil, as well as just expected increased volumes in 2026 that are not countered by possibility of increased demand as we would. But that is just how the market is viewing the price of oil going into the new year. We've seen it weighing heavily on the price of oil in yesterday's session.
Right. What's your outlook of equities?
So equities are doing well. In the US, I think we've spoken about what's driving that, which is the expectation of an interest rate cut. In the UK, we have the budget that the Minister of Finance is presenting today. That is expected to be quite, tax-heavy. Industries like banking and mining are doing quite well in the FTSE bracket. Mining, because of the price of gold that is shot up, and in banking in terms of reports that are coming out of tax relief from the budget that is expected to be presented.
All right, Toba, thank you very much for your insights. That was Toba Kamete, who is the Treasury Sales Manager at Nedbank, sharing insights on what is moving markets today. This has been another weekly broadcast of Nedbank Business Watch right here on Eswatini TV. Thank you so much for tuning in. Until the next time, bye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.